What's up, everybody? I am Jaspreet Singh and welcome to the Minority Mindset. You've heard the news. In 2018, Amazon made $11 billion in profits and paid $0 in taxes. And then they were still able to get another $129 million in tax rebates. What's going on here? This has obviously made some people very angry, especially since we have a presidential election coming, and you can expect this to be hot news for at least the next year. And as you know, the news is in the business of selling hype, so the news will try to make you either really angry about this or really excited about this, because that's how they get paid. That's why in this video, I want to go over the truth of what's happening with Amazon and their taxes. This way you can understand what's happening with logic and not emotion. And before we get into it, make sure you hit that thumbs up button below and subscribe to the Minority Mindset YouTube channel. This way you don't miss our new videos every Monday, Wednesday, and Friday. Let's start by understanding how Amazon is structured as a business. All businesses are not created the same, and different business types come with different tax structures. Amazon is classified as a C corporation, and C corporations are required to pay taxes on their money twice. Let me show you what I mean. Now, I do need to remind you that although I am an attorney, I am not your attorney. So if you have specific tax questions, talk to a tax professional in your area. Let me start by explaining how businesses that only pay taxes once work. So this would be things like LLCs and S corporations. Here we have the money that your business makes. Here we have your business, and here we have you. We have to start by making sure that you're beautiful. So let me draw on a turban, a nice mustache, and a beard. Now that we have that, let's get into how the business actually works. Okay, so let's assume that you made $100,000 from your business. Now, this money flows through your business and comes straight to you. I'm assuming this $100,000 is profit. And now you are happy. Can't really see the smile, but you are happy because you only have to pay taxes on this $100,000 once. You make the money here, it flows through your business, and you pay taxes on this $100,000, and that's it. With the C corporation, it's a little bit different. Let me show you. So over here, we have the same thing. We have, this is your money source for your business. This square now represents your C corporation, and this is you. Of course, you have to start by drawing a turban, a mustache, and a beard. It wouldn't be the same without it. So you make $100,000. Again, now this $100,000 comes into your C corporation, but it doesn't just flow to you. Now, because this is a C corporation, you have to pay taxes on this $100,000 at the business level. Right now, this will cost you just around $20,000. So you are left with $80,000 in the business. And now you, as the owner of this business, will want to pull out this $80,000 because that's your profit. And so you pull out this $80,000, and now you have to pay taxes on this $80,000 again. So you have to take this $100,000, pay taxes on it, which got you to this $80,000, and now you have to pay taxes on this $80,000 again when you pull it out and distribute it to yourself as the owner. That's why it's called double taxation, because you have to pay taxes at the business level and you have to pay taxes on the individual level. Now, let's look at how Amazon works. So in 2018, Amazon made $232 billion. But all of this money isn't profit. Like, this isn't money that Jeff Bezos is just sitting on that he can go and spend at Amazon, I guess. Amazon has bills to pay. So out of this money, Amazon has to pay for the salaries of their 647,000 employees. They have to pay for their buildings, they have to pay for their warehouses, their softwares, and their investments, and all of that. So after paying for, minus the expenses, after paying for these expenses, Amazon was left with $11 billion. This is the money that Amazon did not pay taxes on and that everyone is very upset on, because if Amazon paid taxes on this $11 billion, that would generate another $2.3 billion in tax revenue. So going back to this C corporation chart for Amazon, here we have the owners or shareholders of Amazon. Here is the Amazon business itself, and here is the money that Amazon makes. So Amazon made $11 billion in profit. And normally in the C corporation, you have to pay taxes on the money that the business makes, right? The 2 layers of tax. But Amazon did not pay any taxes on this $11 billion, so they still had this $11 billion, and whatever was distributed out to shareholders or the owners, this is money that the owners would pay. So what exactly did Amazon do to get around paying this first layer of corporate tax on this $11 billion? Well, here are a few things that they did. First, they qualified for tax credits. The government incentivizes and disincentivizes people from doing things with taxes. Like, if the government will give you a tax break for investing your money, more people will be interested in investing their money because they will get a tax break. Here, the government created a research and development tax credit for businesses, and Amazon took advantage of that by investing a ton of money into research and development, which reduced their tax liability. Second, if you start a business this year and you lose $100,000, and then next year you're profitable and you make $50,000, you can carry forward that loss that you had last year in your business and use that to help negate your taxes this year. According to CNBC, Amazon still has tax credits for the losses that they had in previous years, and they're carrying them forward still today. Third, Amazon does a lot of stock-based compensation for their employees. If you are an employee at Amazon, you might be getting paid with a salary plus stock or ownership in the company. So what that allows Amazon to do is they give you equity in the company, and then they can take a deduction for the value of equity that you're getting. So even though Amazon's not physically paying out cash to you, they can still get a deduction on their taxes. These are just some of the most apparent tax loopholes that Amazon uses. I mean, they have a whole team of accountants and attorneys helping them do this. But now let's look at the flip side, because although Amazon does not pay taxes on their first layer of money that comes into the business, that doesn't mean that they're not generating any taxes. Remember, Amazon made over $230 billion in revenue. Most of it is from selling things online. And when you buy things off of Amazon, you have to pay sales tax on most of the things that you buy. So if $100 billion of Amazon's revenue is from selling things that generated sales tax, and assuming you just had a 6% sales tax, that's $6 billion in tax revenue from sales taxes on Amazon's website. Now, the sales tax was not paid by Amazon, it was you, the consumers, paying for it, but this tax was generated because of Amazon. Second, Amazon paid out salaries to over 640,000 people. This includes their executives and their famous CEO, Jeff Bezos. So the salary income that Amazon pays out is taxed, and this is a huge tax revenue generator. Again, this isn't Amazon, the company, paying taxes. This is the employees paying taxes, although Amazon does have to pay FICA taxes on a big chunk of the salaries that they pay out. But again, this is tax revenue that's created because of Amazon. Third, the shareholders or the owners of Amazon have to pay taxes. If you have a couple $1,000s and you have access to the internet, you can invest in Amazon stock. And if you sold their stock for a profit, you have to pay taxes on that profit. More than 4.4 million shares of Amazon stock are bought and sold every single day. So that's a huge capital gains tax generator. Yes, for the third time, this isn't Amazon, the corporation, paying taxes. This is the owners and shareholders of Amazon that are paying taxes. But again, this is a big tax revenue generator because of Amazon. Fourth, Amazon owns a lot of real estate. And well, you have to pay property taxes on your real estate. Remember, Amazon has hundreds of thousands of employees, and they're shipping out millions of products every single day. They have a ton of warehouses and office space to run their business. Amazon has to pay property taxes on the buildings and land that they own. This is a tax that's paid directly by Amazon. No, it's not an income tax, but it is a tax that the corporation is paying. So now that you understand the bigger picture of the Amazon tax game, I want to hear your thoughts. Is Amazon paying enough taxes, or are they not paying enough taxes? Let me know in the comments below and explain why. I'm really interested to hear what you think. Oh, and if you do want to learn more about businesses and tax breaks that they get, I'll link a video for you in the description. Thank you for watching. If you enjoyed the video, hit that thumbs up button and share it with one friend so we can help spread the word. Don't miss our new videos on entrepreneurship, business, and money every Monday, Wednesday, and Friday at 7:30 a.m. Eastern Standard Time. So hit the subscribe button and the notification bell below. That way you actually find out when our new videos are released. And as always, keep hustling.